Hey, Andrew here from the Investor's Way, and welcome to Woody's Weekly Wisdom, episode number 72. And unfortunately, we have to talk about interest rates and inflation again because it's extremely topical. And I just love the article we're going to pull apart today. But if you're watching us on YouTube, do us a favor so that more people can see these videos. Hit that subscribe button and the little bell to get notified when these videos come out so you get access to them straight away. Or if you're watching on Facebook or LinkedIn, hit the like, the share, and the comment button. Certainly let us know what you think about these videos, and that way we can spread these videos to more people so that they can stay informed about what's going on in the financial news, and in particular, how that news might impact them and you in particular. So the story here, this one here, outright stupid, RBA has cornered itself. So I guess if you've been watching any of these weekly wisdom videos, you'll know that I've been screaming from the rooftops that we need some action when it comes to interest rates and action on the downside, and yet we haven't had it yet. And so if we click across to the article, the headline has changed a little bit. Outright stupid, huge double whammy, RBA can't ignore as interest rates decision looms. So as per normal, interest rate decision on the day of the year where most Australians have got all their eyes focused on a horse race and won't be overly concerned about what's going on in interest rates. But next Tuesday in Australia, interest rate decision comes down, and this article is trying to suggest that more than likely the RBA is going to do nothing when it comes to interest rates next week because of the position they're taking around the latest inflation data. So again, if you've been playing along at home, you will know that the RBA has been screaming that inflation needs to get down into the target zone of 2 to 3% before they would consider cutting rates. And lo and behold, yesterday in the Australian market, or Wednesday in the Australian market, inflation came in at a lower than expected 2.8%. The main headlines we were seeing before the numbers came out was 2.9, but no, it came in at 2.8%. So it is now well and truly inside the target range that the RBA has said that they wanted to see before interest rates could drop. And this story talks about the fact that things like rents and food and other goods are starting to fall rather rapidly. Now, you might not be seeing that in your groceries. I know we certainly aren't yet seeing it in our groceries, but some of the pressure that's been on all of these prices are looking to start or continue falling. So that's the good news. But as is always the case, the RBA invented another number to have a look at, and that was this trimmed mean inflation, which is designed to cut out those volatile items that cause inflation to jump up and down a little bit more erratically. And that number's come in at 3.5%. So therefore, put the brakes on any discussion about an interest rate cut because this trimmed mean inflation that we've invented is still above our desired range. And on top of that, there is an argument that inflation's coming down because of the government's electricity price offset or rebates that they introduced because of, in this article, I love that they call it the East Coast gas cartel, which is extremely interesting because in a previous life I worked in an entity where the East Coast cartel, electricity or gas or utility cartel, forced that business into a lot of difficulty. So there's a little bit of a alignment with this shot at the electricity and gas companies for their practices when it comes to prices, because I've seen them do it. But anyway, here we are. We've got these. We were hit with these electricity um, price hikes. They had to be offset to an extent by some government rebates, and now the RBA is saying, well, we don't want to account, or we don't want to acknowledge that they're there because they could be taken away at any point. And if they're taken away, then the inflation number won't be as good as what it's being shown. But we're also in an election year. And in an election year, governments throw money around. So it's highly unlikely that those electricity rebates and gas rebates are going to be removed in the short term. And so therefore, why can't the RBA look at that and include it in their numbers? But this graph's pretty telling, gives you an idea of the significant rise up through this period, and now the matching fall on the downside. But here we are. RBA arguing that those rebates, like I said, might be temporary, and therefore that would hurt the inflation numbers, and so they're not prepared to take them on. Again, another shot at the gas cartel and suggesting that no government's prepared to take them on and force them to bring their prices down. So we all got to live with higher electricity prices and the rebates in the short term. A little bit more talk about the impact of some of the things like education, health, tobacco, alcohol, all those types of things which are very heavily aligned to the CPI. So the prices on those items tend to move with CPI. And so therefore they're a big impact on that number. So why can't we see interest rates come down? Well, as I said, it's all about the numbers not ticking all of the RBA boxes, one that they invented to be able to support this decision. And maybe what they're saying is we're going to wait until we see what happens in the new year. Then we move into a bit of a discussion about forecasting and I guess the numbers versus what's actually happened. And this is pretty amazing when you look at this and you see wage price index, which is the black line for actual, and what people or governments were forecasting was going to happen with those numbers at any point in time. And we just have not seen our wages grow at the rate that everybody would like them to see. So, the article suggests that they've cornered themselves. They have been saying for so long now that the trimmed mean inflation is the one they want, not the headline number. The headline number hits the target, and now they're stuck. And if they don't change rates next week, which is the almost universal expectation, then it's a few months before they next meet. So they don't meet again until February. And this article again goes on to suggest that if they wait that long, they could have caused our economy to grind to a halt, and that inflation will have dropped even more significantly. And then we'll be in the opposite problem, which is we're not growing. And then the dreaded R word gets raised, and that R word, for those who aren't familiar, is recession. And so here we are in this trap that the RBA appears not to know how to get out of. Now, that might be all speculation. That might be just wishful thinking on our behalf, that they should be listening to what numbers are out there now and taking action. I guess, as I said, if you've been watching my weekly wisdom videos, you'll know I've been screaming this from the rooftops for about at least 6 months, if not longer. So I don't think they've waited too long. I think, they're acting too hasty. I think they've waited way too long to do something. And by the time we get to February, it could be a whole different ball game that they're dealing with. And if that means an economy that's slowed dramatically and inflation that's dropped dramatically, they'll now start talking about having to revive the economy. And it's like, well, how about rather than letting it get into a state where it needed revival, that you just let it tick along a little bit more nicely. So that's interesting to see that this particular article has taken a fairly aggressive approach. You don't see that all that often with significant players in the market getting a bit beaten up. But in this case, the RBA is definitely getting beaten up for being, here it is. Here it says they're stuck up its theoretical textbook. It's got its head firmly stuck up its theoretical textbook. So that is an interesting way to end the article, and certainly coincides with what we've been saying, is that we need to take some action. We need to breathe some life into the Australian economy that has been held together in terms of growth from government spending, which obviously we're going to see a bit of leading up to an election, but that's not a long-term solution. We need our consumers out there spending as well to grow the economy and provide the jobs and all those things that we need to keep ticking along. We can't just keep relying on government spending and immigration. We need other factors to drive this thing forward. And a little cut in interest rates would be very handy for a lot of people. I suspect there's a cheer going on from those hearing those words that yes, a cut in interest rates would be very handy for a lot of people. So let's make it happen, RBA, and let's get ahead of the curve rather than being behind and just getting a little bit too bogged down on theory and not being able to effectively read the room of the economy and what's going on. So that is this week's Weekly Wisdom. Hopefully you found that useful. When it comes to what does this mean for your position, I always try and relate it back to you. I think relief is in sight. If we get it next week, it'll be fantastic. But if we don't get it next week, it's almost certain we're going to get it at the start of next year, subject obviously to clarity from those numbers. But I want you to continue to focus as hard as you possibly can on getting some money every month invested, despite what's going on around us. And obviously, hopefully we start to see a bit of relief in prices. I know price gouging is something that's been getting a lot more attention lately, and companies like Woolworths and Coles are in the media regularly for being attacked for those type of predatory behaviour or unscrupulous behaviour when it comes to pricing. So hopefully that gets more attention. We can see the groceries come down, we can get interest rates coming down, and that will enable a little bit more free cash flow for people to get into the investing markets. So stay strong. We're almost through the worst of it, and we could hopefully see a cut in rates real soon. So that's this week's Weekly Wisdom, episode number 72. I hope you have a great week, and I will see you again next week. And don't forget, if you're watching on YouTube, hit that subscribe and the little bell. And if you're watching on Facebook and LinkedIn, do me a huge favor. Hit the like button, leave us a comment, or even just a thumbs up. And if you're really brave, share it with your friends, and let's spread the news. Have a great week. See you again next week. Cheers.